let's unpack both these things. Yum China, the earnings there. Let's unpack, of course, the surprise story out of Moutai, price hike there. Let's bring in our team here on set. Angela, Hanlee, senior analyst here, of course, and Ada Lee to talk us through this. Angela, let's start with you. Yum China, revenue miss there. The stock's reacting quite substantially. What do you think was behind the drop?
Well, it's mainly because the same-store sales has been missing in both KFC and Pizza Hut, and it's actually very, very bad because at least the company is doing well. I mean, the management is doing well because the margin is okay, expansion is okay too, but simply the market is too tough for everyone. Saying if you see the promotion prices, can you imagine one whole roasted chicken in KFC is like $4 So I mean, it's just becoming much more competitive, and then I mean, this is not good. And then we also see that probably this is implication that even KFC is suffering from this consumption downgrade in China. Yeah. So probably this is also going to pressure down the outlook for other companies like Hanlee and others. So we believe that it's a bad thing, but hopefully next year we can still see some improvement in earnings driven by the expansions rather than a per store economics.
If a piece of chicken costs $4, Ada Lee, how much am I going to pay for a bottle of Moutai now?
Well, still 1,499 yuan, so 1,499 yuan if you buy it from Moutai themselves. Yeah. But normally you pay way more at the distributors. So Moutai recently, I think late last night, they announced a price increase of about 20% on average of their core product. And this actually came in a bit of surprise to all of us in terms of its timing, because we have been expecting this type of price increase maybe in the next 6 to 12 months, but it did come a little bit earlier. And I think it's positive news for this company because of the recent slowdown in revenue growth in its third quarter results.
Okay, this is to save financials in some way. So what does this mean for the stock price, and what does this mean for margins of the company?
Yes, so in terms of the earnings outlook, I mean, if you look at it, just for this year alone, the price increase would actually increase the Moutai sales by maybe 3 to 4% based on our estimates. So it is actually quite a large swing, and of course it will boil down to the margin as well as earnings expectation, and you can see the share price reaction today as well, clearly reflecting investor confidence in the company.
Okay, sum it all up for us then, Angela. I mean, because given the disappointing news when it comes to fast food, what does it tell you overall, consumption sentiment in the mainland?
Yeah. So it's not good. At least we can compare the performance of KFC and Pizza Hut, and it looks like a Pizza Hut had a bigger miss than KFC. So and Pizza Hut is obviously more expensive. So we can say that probably KFC is more defensive because when people want to spend less, at least KFC is more about one-person dining. So it's a bit better. But the other thing explains about the consumption behavior of the pandemic is that we are seeing less deliveries. So when it's delivery, you have a bigger ticket size. When it's less delivery, it's more like a takeaways. It's one-person thing. So this is also
you gotta meet the minimum.
Yeah.
Or you just want to eat more alone at home.
Yeah. So maybe, but no, maybe people eat together. So it becomes a less delivery. That also means a lower ticket size, also reflecting into that. So I think the company altogether, yes, it looks like the trend is not good, but it's also partially because the company is also trying a little harder to push up the revenue in different time slots. They are selling cheaper breakfast and maybe also do more a 1% promotions. If you see the promotion list for the Singles' Day promotion, it's big. I mean, why do you even need a promotion for KFC or Pizza Hut for a Singles' Day? I have no idea what is happening here.
Can you give us an example of a Singles' Day promotion? What is that?
Chicken,
what is that meal?
Yeah, we just checked about it, and it looks like there are 40 different promotions. I cannot even check it out. And then as I told you, the whole chicken is $4. So I mean,
I love it.
So people are not choosing those expensive premium ones, and then they are trying to choose this, which is more cheaper and looks like a more value for money things. So consumers are becoming much more value conscious, and I think that's the reason behind.
Yeah,
I'm just laughing.
Including the costumes too.
Yeah. All right. I love it.
Who said it's never to dress up like that and eat a whole chicken?
Why not?
So I have a extra question, if that's okay, Ada, to bring you in. The demand elasticity when it comes to Moutai, that's fairly inelastic. This KFC, you can save that for a better paycheck, right? That's why you do promos
more sticky,
here.
you're saying.
Moutai, they raise it, then you point, right? You go up the revenue. So my question is, what happens to the other peers? rivals, you know, your Wuliangyes, for example, are we about to see them also raise their prices too? And do you see demand then start to also pick up for those?
I actually believe these other companies could take the Moutai's league and also up their prices in maybe the next 6 to 12 months. I think it is the right time for them to do so in terms of also expanding the margins and growing the earnings. So this is one of the opportunities because we are seeing some consumer slowdown in demand. So this is a way to prompt the sales.
Okay. Thank you so much. BOJ, you heard that? Moutai hiked before you. Ada Lee, Angela Hanlee, Bloomberg Intelligence Senior Analyst on all the latest. Right.